Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action, what has been going on and what I think is likely to happen next. As I get into this video, if you find it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe. Tapping the bell will enable you to stay up to date with all the video content that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and it is the first place that we go to notify the community of what is going on in the crypto space. So do yourself a favor, keep a finger on the pulse of crypto by joining us down in Discord. Okay, let's jump right down into this. Bitcoin paired up with the USDT here on the hourly chart, and Binance is our data source. We did see a bit of a run to the upside yesterday, kind of as we were expected there. We did actually pull back down a little lower than I was expecting during the Twitch stream. Okay, I was expecting us to kind of hover around this demand area here, but it does look that maybe things have just changed a little bit. We wicked down, we took out some of those long positions, and then we went on up. Okay, so there were a few people shorting here. If they were lucky enough to get out, that would have been fantastic. And if you were able to get into a long position down within these wicks, then you did really well yesterday. Now when we take a look at this, we can see that we did push up, but we haven't met the 1-to-1 ratio. The 1-to-1 ratio here is at $17,066, and the minimum expectation that I have is to kind of come up higher than this wick here, this being 17,061. So this little kind of area where we kind of cool off right here, this is interesting to me. If I actually find the volume, throw the volume in here, we have high volume coming up, we have then low volume coming down here. Okay, so this is an interesting kind of take on it because it does look like we might be setting up for a bit of a run upwards, which is good. And basically this area of previous supply, I think, has now turned into demand. If I go through this across here, you can kind of see the price coming in here, but I don't think it's going to stay in here for too long. And this is where the buying pressure is. So previous supply, now demand. If we take a look at our stochastic RSI on our hourly chart, it is down in this oversold area. So I'm not expecting terribly too much, but I am expecting a bit of a move upwards. We are overbought on the daily, 8-hour, 4-hour, and pretty much most of these other timeframes as well. If we come into this, if we take a look at that daily, we are up in the overbought area. The 20-hour, we're overbought. 16 hours, we're overbought. 12 hours, overbought. 8 hours, overbought, but we could probably stay up here for a little bit longer. Same with the 4-hour, and the day hourly needs to obviously move up. So I would say that we've only really got one more push in this before the market decides it wants to come on down. So kind of bear that in mind overall. Now, what I want to kind of spend a little bit more time today talking about, not so much the kind of the smaller kind of time frame stuff, because there is a small push upwards, and I said anything above 1761 would be enough. We could see a collapse and then a bigger push to the upside towards our larger supply area. This is an area that I do think we have to go to at some point, but if we do completely break down for some fundamental reasons of things that are happening outside of, you know, the price charts, then yeah, we obviously simply just won't get there. But 17,200 to 17,400 is the ideal area from a TA point of view. That would be a really good area to kind of think of a B wave move. Now, obviously, what I do want to talk about is more of this kind of ABC structure or kind of WXY structure taking us down into these lower ranges where we are looking at potentially a double bottom kind of scenario here. So we're talking about $15,500. So we are looking for that drop, okay? But that is only going to be a small pit stop though, because I do think if I come up into our 4-hour, all of that would just be marked as an A wave, would bounce up and then we'd pull back down into new lower lows. Essentially on a bigger scale here, you can kind of see this ABC structure on the left or in the middle of the screen here. And this is showing us at the 13,200. And if I zoom out, you kind of have this big white A, B, and C structure also kind of mirroring us down, taking us into these lows. I over exaggerated that, but you can kind of see it right in there. Okay, so for the most part, all of that's looking kind of on track, kind of what our expectations are. And if we come up into our daily chart here, we can focus in on what typically has happened time and time again, right? We go into higher highs and higher lows and we break down. Higher highs, higher lows, break down. Higher highs, higher lows, break down, and so forth. From where we are right now is, again, higher highs and higher lows, and we will be ending up with a break to the downside on the daily chart here. There isn't anything unusual, nothing unusual happening here that hasn't already happened in the past. And, you know, until we actually start seeing some certain participants actually, you know, playing a little bit more I don't think we can get too carried away with thinking that the bottom is in or anything like that. Okay, so I'm expecting new lower lows to come in. We can kind of see that from this graph and where we're kind of looking at this kind of coming in. And at the moment, it does indicate to me anywhere really between 13,200 and 13,000 and 14,200, right? This little area down here. Now, that could well be the bottom of the bear market. It might not be, though. I don't know. At this point, we have to have no structure. Once we kind of complete this area, we have to see what happens next. This is a very similar situation that we found ourselves in June, right? June could have been the bottom, except what happened afterwards was telling us that there was an indication that it wasn't. Let me show you. Okay, so this over here, this one here, right? This was our June low. Okay, 18th of June 2022. This was the June low. Then you can see all of this overlapping structure. This was a clear indication, and as I was vocally saying on YouTube for pretty much most of June, July, and August, that this is not going to end well. This is not a bull market kind of reversal, kind of 𝗕𝗘𝗪𝗧 or anything like that, right? So this was not going to be the bottom, and it's because of all of this overlapping structure. Okay, and then obviously we broke down. Now, it didn't really matter what it was. It was a mixture of various different things that kind of led us to break out of this kind of structure here. And again, this was kind of bringing in a lot of confidence in September as that kind of come back down. We kind of come into these ranges, and people were still not breaking these lows and kind of confident. It wasn't really until FTX that kind of pushed it over the edge. My point here is that it didn't have to be FTX. It could have been anything else. The market was incredibly fragile. It just needed a nudge to take it down. Okay, so although this over here was potentially going to be a bottom, it was an end of a structure. What happened afterwards, this area here, indicated to us that we had to come on down further. Okay, and what we find ourselves in is a very similar situation over here, right? We have not an end of structure, so I don't know why we'd want to think this is the bear market bottom because it's not an end of structure, but this down here would be an end of structure. Okay, so we have the overlapping structures, we pull them down, we come into this area here, and what happens after this area of 13,000 to 14,000 is going to determine whether or not this is the bottom. Okay, and for the most part, I'm not expecting this necessarily to be the bottom because I'm not seeing enough institutional investors buying. Okay, I'm not seeing that. All I'm seeing is retail investors hodling. And until retail investors sell their assets to the institutional investors, I think we're going to continue to see more pain and more blood spill in the space. So I'm not optimistic about 13,200 being the bottom, but it's hard to say that it isn't going to be without seeing what happens afterwards, right? But what we do know is that this is the most obvious area for the end of structure. And again, I'll draw it on here on this chart so you can kind of see what that looks like. Okay, so if you're not familiar with Elliott Wave theory, check out 𝗕𝗘𝗪𝗀𝗀𝗪𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀 can check that out. They've got an Elliott Wave theory course. It's a 21-part video course that will explain all the different structures, right? And it's basically tracking people's behavior. This is why I say that the market's incredibly fragile, right? The market needs to go down. It just needs something to give it that little bit of a nudge in that direction, okay? And there's a lot of fundamental things that are going on, just in the same way that we were highlighting FTX before FTX went down. There are things happening right now that could potentially lead us into that next surge to the downside. So be aware of what is going on. Join us in a Discord, check out the urgent news that Chris puts out, and keep a finger on the pulse of crypto, because essentially this could be a fantastic opportunity to accumulate rather than get stuck in positions that you don't necessarily want to be stuck in because you believe that the bottom was in and all that wonderful stuff. Now, I could be wrong, of course. There's always that element, and I'm willing to kind of take that on the chin if I am. However, I don't think that considering the fact that you've got big billionaires and multimillionaires coming out of positions and not really coming in, and have got only retail money coming in, that doesn't really strike me as a lot of confidence to think that a bottom for Bitcoin is in by any stretch of the imagination. We do have to consider here that retail investors are usually on the wrong side of a trade. Very few times are the retail investor on the right side of the trade. So just bear in mind that until big money really starts coming back in here, and until small money is starting to sell their assets, I would be kind of optimistic that we've got more room to the downside than the other way around. So hopefully you have found this brief update on Bitcoin useful. I wanted to kind of give this a bit of a different kind of angle on Bitcoin and the crypto space than what we just get from the smaller timeframes. I think we have to be aware that the larger timeframes are, of course, indicating that the things are bearish. They're not bullish at all, and we should really be, optimistic when optimistic times do present themselves, and otherwise we should be bracing for a bit more of a colder winter. If you found it useful, hit the like button. I appreciate that. If you're new to the channel, subscribe, tap in the bell, selecting all the notifications. And if you haven't joined us in Discord, guys, I do urge you guys check it out. Linked in the description down below. Until the next one, have a fantastic day.